What's up, folks? Today, we're talking about something that's going to give your wallet a break. The electric car FBT exemption. So, you might be asking yourself, what the heck is FBT? FBT stands for Fringe Benefits Tax, which employers have to pay for certain benefits they provide to their employees or directors. One of those benefits is providing the use of a company car for personal use or private use. Let me break it down for you using an example. So, at your company, one benefit you offer your employees is using a work vehicle for private purposes. This means they can take the vehicle out for personal errands or activities outside work hours. The ATO sees this benefit as an alternative payment to you that needs to be taxed. As a result, because of Fringe Benefits Tax, FBT, your company needs to pay tax on this benefit at a pretty high rate of 47%. This tax is based on the value of the private benefit provided, including things like the cost of the vehicle, the maintenance, and insurance. On a $40,000 car, you could end up paying about $7,000 in Fringe Benefits Tax for a year. But despite the additional costs, offering a work vehicle for private use can be a great perk for your employees. It can help attract and retain top talent, boost job satisfactions, and improve work-life balances. So what if I told you that you could still provide your employees with the benefit of a car and qualify for an exemption from FBT? The key is in the type of car you purchase. As of July last year, the Australian government introduced the Electric Car Discount Bill 2022, which means that if you provide your employees with cars for private use, and these cars have zero or low emissions like electric cars, plug-in hybrids, or hydrogen fuel cell cars, you won't have to pay FBT on them. So this could be a great opportunity for your company to save some money while also promoting sustainable transport options for all your employees. Of course, you need to qualify with all the ATO rules first. The car you purchase needs to be a zero or low emissions vehicle, meaning it has to be full electric, hydrogen fuel cell, or plug-in hybrid drivetrain. And it must be designed to carry a load of less than 1 ton. So the Tesla Cybertruck won't qualify. Cars also need to be under the luxury car tax threshold for fuel-efficient vehicles, which for the 2022 to 2023 financial year is $84,916. There are a few other things you need to keep in mind. First, to qualify, the electric car must be used for the first time on or after the 1st of July 2022, even if it's held before this date. This means the car can only be available to employees after the 1st of July, regardless of when it was purchased. If an employee used it on 30th of June 2022 or earlier, it doesn't qualify. Second, the scheme only applies to plug-in hybrid cars until the 31st of March 2025, meaning that from the 1st of April 2025, these cars will no longer be considered low emissions. But having said that, if you purchase a plug-in hybrid car before this date, and your novated lease period continues beyond the 1st of April 2025, you will still be able to claim the FBT exemption until your contract lease expires. Third, the FBT exemption will also apply to cars under the salary packaging arrangements if that is something you offer to your staff. And fourth, car expenses such as registrations, insurances, repairs and maintenance, and fuel, if there is fuel, including electricity to charge the car, also is exempt from FBT. Now, just because the electric car is exempt from FBT, that doesn't mean that you can leave it unreported. You must also include the value of the benefit when working out whether an employee has reportable fringe benefits amounts. And what does that mean? You need to tell your tax agent to report the FBT amounts. And if the employee's reportable fringe benefits are more than $2,000 in an FBT year, you must report it through single touch payroll or an employee's payment summary. So that's all there is to it. To recap, when you're providing benefits to your employees, it's crucial to keep FBT in mind. You don't want to get caught out by the ATO, so it's essential to understand the tax implications of offering all these private benefits to your employees. But hey, the good news is that with the new electric car exemption, you can potentially save some serious cash while promoting green transport options for your employees, or even to yourself if you're an employee or a director of your own company. Who doesn't love a win-win situation, right? Anyway, We hope you found this video helpful and informative. If you have any questions or comments, feel free to leave them below. Don't forget to like and subscribe and stay updated on our future videos. Thanks for watching, and I'll catch you next time.